Hey traders, welcome back to my channel. So today, unfortunately on 8th of July 2021, I had a red trading day. In this video, I will be sharing my trades, the good things I did, the mistakes I made, and how I ended up $1,500 red for the day. This just shows you that trading is not as easy as it sounds. One single mistake can put you red for the day. Let's straight jump onto my watch list for the day. On 8th of July, I was watching Tesla, Amazon and Apple for the day as my primary watch. On the sidelines, I was watching Baba and Baidu. I post my daily game plan and the watch list on the Discord group. If you want to be part of our Discord group, the link will be in the description box below. Let's see what SPY and QQQ were doing for the day. They both were actually red in the pre-market. We had a couple of reasons for that. The first reason is that Delta variant is spreading very quickly in the US. Second reason is that the European markets had a red session overnight. But if we forget about these reasons and if we simply look at the chart, this is a pullback that was long overdue. Since 21st of June, since this green candle SPY has been in a clear healthy uptrend, this pullback has been long overdue and it's still holding the 20 EMA and the 9 EMA on the one-day chart. So this pullback is nothing to be concerned about. Even though SPY was red in the pre-market, it closed really strong with a strong green candle with a good enough volume. So I'm excited to see what happens in the next few days. The same story can be seen on QQQ. QQQ was red in the pre-market, but then it recovered in the afternoon. It closed green for the day with strong volume. So let's see what happens next. The first stock I was watching for the day is Tesla. Tesla was actually under this lower trend line in the pre-market itself. My levels for the downside were the break of 625 or 620 towards the downside. For the upside, I was looking at the break of yesterday's low, which was around 639 and 640 level to scalp it towards the upside. The second stock I was watching for the day is Amazon. Amazon actually gapped down big time in the pre-market. It was around 36.30 in the pre-market itself. So that was a big gap down around $50-70 for the day. But I wasn't thinking of shorting Amazon because of all the good news and the strong breakout. I know that many people who missed this breakout, they will most likely buy the dip on Amazon, and that's what happened. So I was looking at Amazon that if it makes a clean flag pattern or a clean triangle towards the upside, I can then scalp it. The last stock I was watching for the day is Apple, and just because Apple is very near to all-time high on Apple is 145.09. After this break of the trend, we saw this crazy move on Apple. If it breaks 145, we could clearly see 150 in the next few weeks or maybe in the next few days. Let's see what happens. I don't have a recording of my first 2 trades on NVDA, but I have the recording of the rest 3 trades. I took 5 trades in total. My first 2 trades were on NVDA. I wasn't watching NVDA as my primary watch, but I'm still watching NVDA every single day as my secondary watch because the stock split is very near. It's on 20th of July. So we might see another run on NVDA, but it's very extended on the one-day chart. What I saw on NVDA is this big green candle and this small red candle on the pullback. It bounced off of the EMAs. So I took it right here. My first trade on NVDA was right here on this candle. I got filled 3 contracts at a premium price of 9.45. I'm trading 800 calls, so just 1 strike out the money. But I got stopped out on this candle when it pulled back. I was expecting 800 to break just on the next candle. That did not happen, and sometimes NVIDIA just reverses to maybe 793, 792. That's why I covered all my position at a premium price of 8.28, losing around $350 on this trade. After getting stopped out of my first trade, I entered NVIDIA again because I saw that it's still holding the 9 EMA. The trade is still intact. I just wanted to catch the break of 800. So I entered again on this candle. I got filled 3 contracts at a premium price of 9.50. After a small consolidation, the premiums were still holding their value, which is the thing I liked, that okay, it might pop now, because the last time premiums dropped in value big time. They went from 9.45 to 8.28. After the break of 800, I took 2 contracts out at a premium price of 10.20 when it was having difficulty breaking the 801 and 802 level. And then again, I saw that 802 level is not holding. And if you have seen my previous recaps, if I take partial on a position, I won't let the remaining position go negative on me. When I saw that the premiums are coming back to my entry point, my entry was at 9.50. I covered my whole position, the remaining last contract at 9.67, overall making $150 on this trade. This is my third trade for the day. I saw that NVDA gapped down in the pre-market. It made a low of the day around $620 level. Then it filled the gap. This is the yesterday's low, 638 level, and then it dropped down. So I wanted to catch the break of 625 because I thought that if 625 breaks now, we could see the low of the day around 620 and I can seek my profit taking at $620 level. That's why I entered 10 contracts. I'm trading 625 puts and my fill price was 10.07. After I entered this trade, I knew that my entry is not that good. It had already made 4 red candles, so I was expecting a green candle. I should have waited for this green candle and took it at the next break. And Tesla usually does that. It makes this flag, it tests that level, it will make a green candle or 1 or 2 green candle flag, and then it will push down further. But once it broke 629 towards the upside, I covered my whole position at a premium price of 8.15. So this was a big loser for the day. I got filled at 10.07, which is not the best fill in the world. I kind of chased it and I held on to my loser for a bit longer than I should have. And in total, I lost $19-20 on this trade. That put me red for the day. If I go back and review this trade, I will be the first person to admit it that my entry wasn't A+. When I took this trade, it just was too extended on the 1 minute chart. It moved from $630 to $625, making it 5 points move without giving any sort of consolidation. So basically, I should have waited for a flag and take it at the next push down. Now, because my entry wasn't good, I was expecting a flag and the flag did not happen. It just kept pushing up. Being a scalper, my exit should have been at the break of 627 or 626 towards the upside. But on this trade, I just held on to my loser for a bit longer than I should have, making me red for the day. This means that if you're a day trader, you have to bring your A game every single minute of trading, because even one single mistake can put you red for the day or maybe even red for the week, sometimes even month. My fourth trade of the day was on snow. I wasn't even watching snow, but one of the traders in our chat room, he called it out that snow is moving. I looked at the 1 minute chart. It had post from $250 level with the high volume on the 1 minute chart. I tried to get filled on the pullback to the 9 EMA. It was holding this 9 EMA. So I tried to get filled at the mid price a couple of times. I wasn't able to get filled, but eventually I got filled 5 contracts at a premium price of 4.45. I'm trading 250 calls. Now, if you haven't noticed, is that I am reducing my size. This position was only worth around 2,500 US dollars. This is because I'm already red for the day. If I'm red for the day, I don't allow myself to increase my size. In theory, I could have made all of my losses back on this trade if I would have taken maybe 10 or 15 contracts, but that's not how I trade. Every trade is a risk to reward. If I'm red for the day and if I increase my size on snow, and if by chance it doesn't work in my favor, it will just put me in a deeper hole, which will be impossible to come back from. After my entry and when snow was around $253, my premiums were already up $100 per contract. So I took 2 contracts out at a premium price of 5.62. This is because I was expecting some kind of resistance before the break of high of the day, or even if it breaks high of the day. Around the high of the day, I was looking at the time and sales. 253 level was not holding on the bid side. I could see a lot of red on the time and sales. That's why I covered 1 more contract at a premium price of 5.92. After my last fill price, snow just tested the 9 EMA again on the 1 minute chart. It broke the high of the day. I covered 1 more contract at a premium price of 6.08. Now I'm only left with 1 last contract on snow. I wanted snow to hold the 9 EMA for the break of 255, but when snow came down under 9 EMA, I covered my last contract at a premium price of 5.37. In total, I made $586 on this trade. My last trade of the day was on Tesla. On Tesla, I saw that it tested this yesterday's low, this 639 level. The dotted line is the yesterday's low. It tested that level, made a flag, pushed out of the flag. Then it made this new high of the day around 640 level. I missed this move, but on the pullback, I got filled 5 contracts at a premium price of 8.05, expecting 640 to break, and maybe we can test 641 and 642 towards the upside. After my entry, what I noticed is that every time Tesla goes to $640 level, there's a lot of red on the time and sales. The speed increases on the time and sales, and there's a lot of red. So I was like, okay, buyers are not that interested in this stock. I'm already red for the day. So just to be safe, I covered all my contracts at a premium price of 8.26, making $100 on this trade, but I would just consider this as a break-even trade. If I go back and look at this trade, my exit was on point. I exited this trade right here at the top of this candle, making $100 on this trade. But if I would have held this trade for even 10-20 more seconds, my premiums are at 7.30. So I would have lost maybe $400 on this trade if I would have held it for even 20 more seconds. I exited this position because every time it goes to $640 level, I was not seeing buyers hitting the ask. Before the break and around the break of a critical level, I want to see a lot of green on the time and sales. That just means that buyers are stepping up, buyers are hitting the ask, but that is not what was happening at the $640 level. Every time it was going there, I could see a lot of red on the time and sales. The second reason is that the SPYs and QQQ was also pushing down around the same time. So in this case, reading level 2 and tape helped me save $500 for the day. That's it guys, these are all my trades for the day. In total, I lost $1450 on this day. And if I go back and look at my trading on this day, 8th of July 2021, my trading wasn't that bad. It was only that one Tesla trade where I held on to my loser for a bit longer than expected that put me red for the day. Now the good thing I did after my losing position on Tesla is that I lowered my position sizing. I only took 5 contracts on Snow and then 5 on my last trade on Tesla. No matter how good the opportunity is, you are putting on risk to make money, and I'm just not willing to put on increased risk when I'm already red for the day, because if that trade is a losing trade with increased size, it will just put me into a deeper, bigger hole. Saying that, I would like to conclude this video. If you guys have any questions, post a comment down below. I will get back to you as soon as I can. Make sure that you follow me on Instagram. I post a lot of good trading content on Instagram as well, including trade breakdowns, day breakdowns, my watch list for the day sometimes, and everything like that. If you like this video, give this video a thumbs up because it helps out the channel a lot, and subscribe to my channel for a lot more trading content. Thank you for watching, and I will see you in the next video.